Hello everyone, my name is Elaine Stafford and you're very welcome to KPMG's podcast Conversations with Auditors, the podcast where we explore the relevant issues, opportunities and new ways of working that are shaping the future of the profession. Today I'm delighted to be joined by David Drought. David is the lead director in our accounting advisory group. David, thanks for joining us. For those of our listeners that are not familiar with the accounting advisory group, perhaps you could kick off with giving a brief overview of the type of work you perform.
Yeah, of course. Thanks, Elaine. Accounting advisory was established to help clients with complex and challenging accounting and financial reporting issues. These arise from a range of scenarios, be it business transactions, business decisions, regulatory changes, and also changes in accounting or amendments to accounting standards. Simply put, if it's a debit and credit involved, accounting advice may be needed. But as we're both aware, businesses and business transactions are becoming more and more complex, and so interpreting and applying accounting standards is proving challenging for certain clients. And when you put in transactions outside the status quo, that can become very stressful for clients. And so that's where we come in, hopefully to help and ease some of that pressure.
The debits and credits can be a challenge.
Absolutely.
Doesn't matter how experienced you are. So what are you talking to clients about at the moment?
A lot of our clients have December year ends, so the last period would have been looking to close out that in terms of year end reminders or dealing with significant transactions during the year that they didn't get around to really considering the accounting treatment. What we do encourage clients to do is attend our financial reporting seminar that we present in Q4 of every year, because that's targeted very much for these purposes. We cover off year end reminders, we look at what's topical from a financial reporting perspective, regulatory updates, and we also give an update on accounting standards, be it new or amendments. And most clients are very happy to hear that there's no significant new standards impacting them this year.
You mentioned regulatory updates there, David. They're really relevant to a lot of our listeners. Is there anything in particular you'd like to highlight or draw out there?
Absolutely. When we talk about regulatory updates, we're talking about ESMA, FRC, IASA, each of which are at the end of every year, they announce their priorities or focus areas for the upcoming year. And so, as you can imagine, there's a level of consistency right across the regulators. There's consistency in terms of issues they brought forward that they feel need to be further addressed, but also more topical things that they think that's very important to be on clients' radar. As you can also imagine, there's consistency in terms of the actual topics. Climate-related matters is right up there in terms of consistency with financial and non-financial information. Obviously, there's a raft of climate reporting and insurance considerations coming down the line that we could get into and spend all day talking about, but I'll hold back for the moment. Also, consistent across the regulators as well as in terms of geopolitical events, the conflict in Ukraine, where that's relevant for companies, gives rise to a number of financial reporting challenges. There's macroeconomic events such as rising interest rates and rising inflation rates that all again give rise to financial reporting and audit consequences. So these are things that are on our clients' radars, but also the regulator will be focusing on over the upcoming cycle. If I consider IASA a little further in terms of some of their priorities, they also include a number of items such as impairment considerations, alternative performance metrics, which has been topical for quite a while. There's covenants, cyber risk, just to name a few. Supply chain financing as well, which is an area that the clients often, I wouldn't say struggle with, but there's complex accounting that can be considered. And that's probably just to name a few that we've talked a little bit more with clients about more recently. That IASA publication also very interestingly, helpfully includes a section directed towards management directors, audit committees. It's a should and should nots, and I really recommend that's relevant to a lot of clients, and it's an interesting read. But they're probably the current items we talk to our clients in terms of regulatory updates. Yeah.
Thanks, David. No one wants one of those IASA letters in the post, so it's really important we pay attention to all of those topics. On a day-to-day basis then, perhaps you could tell me a little bit about the type of projects that you and your team work on.
Yeah, of course. So as I probably would have touched on, we spend a lot of time dealing with sort of complex and challenging accounting accounting issues, and a lot of these arise from transactions, but not just around transactions either. Some are implementation of current standards from changes in businesses. So really the great thing about accounting advisory is no one day is the same. We have a fantastic client base, and that brings a range of accounting challenges. So I suppose maybe just to give you a sense of the mixture of the larger projects and what we would see. So if I take, say, GAAP conversions is something we would work on with a number of clients. And so this is where clients are looking to convert from FRS 102 to IFRS to US GAAP, or any combination of these, and there's various reasons why that might take place. So they're a big project, along with maybe, say, transaction support, which is quite wide ranging, where groups are acquiring businesses, selling businesses, and some of which we work very closely with our TS colleagues with providing due diligence support. Very commonly you'd see the acquirer trying to do accounting policy comparison with the acquiree, maybe look at GAAP differences. And often what leads into that then is acquisition accounting. So again, our valuations team do a lot of work around the purchase price allocation, but where we come in then is from the accounting perspective, where IFRS 10 and other acquisition accounting considerations all need to be sort of followed, documented, and we're going through things like, identifying acquisition dates to form a consideration, some of which give rise to lots of complexities. And if I think about one of the more complex areas we work on as well is group reorganisations. So businesses have lots of reasons to do this. It might be to clean up a group in terms of reducing costs. It could be strategic in terms of moving businesses around prior to a sale, in terms of a carve out. Or it can be purely from a non-compliance or from a compliance perspective. So that's a challenging area. And look, what's obviously fundamental to us as well is accounting papers. So we provide accounting opinions from KPMG perspective, but we also help clients document their accounting analysis for transactions. And even within that, then there's common themes of things like share-based payments, debt versus equity consideration. So these complex areas where clients may not have the experience of having to work through, purely because they don't see them very regularly. Outside of that, there's probably, we work with a number of insurers from an IFRS 17 perspective in terms of implementation, and some of that might be staff secondment, and then some from an advisory perspective as well.
Very good. I might go back to the IFRS 17 piece there, one that we were debating the other day. So can I ask you, David, does IFRS 17 only apply to insurers?
A very good question, Elaine. And look, to be really explicitly clear, it doesn't just apply to insurers. It's IFRS 17 covers insurance contracts, and it is very relevant for corporates. And it's important that corporates consider this, what elements is applicable to them. Now, the standard itself is quite wide ranging, and there's a number of exemptions that in some ways get you out of the standard after that gets you into it. But one of the areas we know that does need to be considered is around financial guarantee contracts. And I suppose in this respect, even if I just jump into that for 1 second, historically, IFRS 9 was amended to uncover financial guarantee contracts. And really what happened at that time, a lot of our corporates would have considered these to be insurance contracts. And they would have ended up in a provision standard where it was a bit more straightforward, and you would have got to a view of not having to recognise, or may have not got to recognise an adjustment or a provision. However, from 1 January 2023, these corporates now have an accounting policy choice between IFRS 9 and IFRS 17. So ultimately what this means is they will need to consider where they have these in place, whether they need to recognise an adjustment or a minimum, calculate what that might be. So that's one example where it will impact a lot of our corporate clients.
I think I'll have to come back and pick your brain a bit more on it another day.
Very welcome to.
If we go back to the projects that you work on, it'd be good to get a little bit more detail on them. Perhaps you could talk me through what you would do, say, for a GAAP conversion. How would you assist a client?
Yeah, we have a number of these projects ongoing at the moment as well, and depending on the client, a big element of the role might be from a project management perspective. So we're working with all the key stakeholders. That may be the finance team, along with the management team, the board, and importantly as well, the client auditors. And it's important everyone's brought along the journey, buy in terms of timetables, but also from an accounting perspective, there's often some challenging accounting judgments coming up throughout this process, or even simply accounting policy choices. And so it's important that everyone's brought along, these things are addressed in a timely manner, so there's no surprises at the end, and timelines are met. From our perspective then, we have the experience of putting a process around it, so we get that understanding of the business, and then phase one, we're looking at initial impact assessments, where we go line by line through their financial information, going, well, is there a gap difference here? If there is it relevant to the client? And from there then we build a picture of, well, what areas do we need to get into a bit more? Revenue is often that area due to the complexity within the standards, or what areas where we immediately know, well, we need to calculate an adjustment here, as well as get into the details. So for example, leases might be that area. So we work through all of that. Following on from there, then we work with the clients then in terms of quantifying these adjustments, writing up technical papers. All that flows then into their updated GAAP figures and financial statements or financial information. And I suppose the interesting thing from a project management perspective, when you put all that together and you're putting together looking for information that they may not have to extract before, all this is really, really challenging. You put this onto a busy finance team, and that's where the support is often needed.
Yeah, it can be extremely time consuming, one of those conversions.
Yeah, absolutely.
You mentioned group reorgs there as well. You might talk to me a little bit more detail about those and how you can assist there.
Yeah, so this is an area, again, a lot of clients may never have to come across this, or they come across it once or twice periodically. And I suppose a group reorg can be from 2 steps to 200 plus steps, but I can say there's few without their complexities. And when you're not coming across them regularly, you don't really have a need to have the experience of, well, what areas do I need to look at? But I can say from a lot of group reorgs, there's lots of accounting complexities, and I probably shouldn't just say accounting. There's company law and accounting standards that all need to be considered. So really, even just to give you a flavour of it, there's things, a common group reorg may include things as share issuances, there's distributions which require distributable reserves analysis, there's asset transfers, business transfers, common control transactions which will require fair value versus book value considerations, and that's just to name a few of the challenges. So again, this is an area where clients often get into the process and then quickly realise that they need assistance. And as we go through all of this as well, we're very conscious of leaving an audit trail where the judgments, the considerations, everything, the client conclusions are all documented, because these sort of transactions are all subject to a lot of audit focus, obviously, when it comes to the audit cycle.
Sounds like a big challenge, a group reorg. What other challenges, I suppose, have you helped clients face over the last year?
Yeah, so I suppose the interesting thing is no 2 transactions are the same. No 2 business combinations, no 2 group reorgs. And even when they look similar up front, when we get into the detail, there's always complexities unique to them. In saying that, we do have the experience to sort of know, well, which areas we expect these complexities to arise in. And I suppose one of the areas maybe that illustrates this is around, we've a number of clients this year that's raised funding via private equity. And I suppose private equity transactions bring a number of accounting challenges and considerations which are not always considered at the time, and often end up being the responsibility of the management team of the operating company acquired. And I suppose just to maybe expand on that, it's where private equity obtain controlling interest, this is often done via a newly incorporated acquisition company. So that company will likely be applying fair value accounting. So then you're into purchase price allocation, which is an exercise that require a lot of sort of inputs and efforts and time, as I said, from probably the management team of the operating company will there's likely a fall on. Depending on the funding structure, the instruments used, they're often, and we see a lot of complexity in terms of whether they're debt versus equity instruments, and that can require quite a bit of analysis, and it's not always considered at the time. Share-based payments and other incentive arrangements again are complicated in any scenario, but we do find a number of private equity transactions that this does prove challenging when it comes to financial reporting and audit time.
So as auditor, it sounds like you could really help a lot of my clients with transactions that they have ongoing or plan to undertake. Given the independence rules that apply to auditors though, can you in fact help my clients?
Yeah, and I suppose the simple answer here is yes, we can, once it's within those independence rules. So when we do have clients or audit clients approaching us, or potential audit clients approaching us, we do need to consider those independent considerations. But there is a wide range of services we can provide within those independent rules. And what I would say is, when this support is required, we obviously need to consider those along with the audit team as well. But that's a discussion we have on a regular basis.
Okay. And you mentioned there some of our other departments in KPMG. Do you work with many of them assisting their clients?
Yeah, and look, that's one of the great things about the role we do. We work with colleagues right across the firm. A lot of what I've talked about there are often led from other departments. If you look at a lot of the group restructurings we do, tax are either involved or might be leading that piece out. Our legal colleagues are also involved in that area as well. So a lot of these projects are working hand in hand with them. Our TS colleagues, as I touched on, we work on due diligence exercises feeding into their reports. And similarly, if I think of corporate finance, we're talking about funding structures, debt versus equity classifications. So there's very few departments that we don't work with, or hopefully the accounting complements what they're already doing.
Very good. You mentioned at the start there the financial reporting seminar. Is there other items similar to that you and your team contribute to as well?
Yeah, so what we try to do as well is contribute to the firm's thought leadership. So we are in a unique position where we're seeing clients coming to us with accounting challenges, and where we see as our team or topical challenges come up, we do try to get in front of that and put publications out there. And similarly, where we see something coming down the road where we think this will be challenging for clients, we look to get in front of it and release thought leadership. So over the last couple of months and year, we would have released a number of articles around financial reporting implications from the conflict in Ukraine, the impact of rising inflation rates and interest rates, and also impairment considerations in terms of businesses with hybrid working environments. So that's what our team has probably contributed to, and I would say the firm and the wider network has significant publications in this area as well, where we look to leverage off that and share that with our client base also.
Thanks, David. You've really brought alive what the Accounting Advisory Group do and the support that you provide to your clients. Before we wrap up here today, is there any tools or resources out there that our listeners could use to help them in regards to accounting or financial reporting issues? Absolutely, Elaine, there is. And I touched on the financial reporting seminar we done around year-end reminders in December. That's probably available, and it delves into some of these in a bit more detail. I'd probably say we're due an in-person financial reporting seminar with our clients, hopefully. So hopefully we get to announce that later this year. But in terms of, say, toolkits and publications, we do have really useful resources out there from the firm and from the wider network. There's illustrative financial statements, which are really, really helpful when it comes to preparing annual reports and financials. There's disclosure checklists, and then there's more detailed publications. Obviously, KPMG Insights, which gives very helpful examples and application of IFRS accounting standards. But then there's also specific guidance and publications on standards such as revenue, and we have an excellent one also in terms of IFRS 2 share-based payments. So there's lots of toolkits out there that should help finance teams hopefully deal with some of the challenges that they face. Excellent. Biggest challenge can be finding the time to look at it all and read it all.
Absolutely. And look, that's where we come in.
Very good. Thanks, David.
Thanks, Elaine.
Thanks to all our listeners. If you have any questions on the topics that David discussed here today, or you feel there's other areas that David or another member of the Accounting Advisory Group could assist you with, please feel free to reach out to David or any member of the team, or if you prefer, your usual KPMG contact.